Here with more insights on the Ethereum ETF race is VanEck, head of digital assets product, Kyle DeCruz. Welcome to the show, Kyle.
Good morning. Thanks for having me on.
Thanks for being here. All right. You just came up in our last segment. We're talking about how each of the firms that are launching this ETF today are going to differentiate themselves from each other. Talk to us about how VanEck plans to stand out amongst these 9 firms.
Absolutely. As was alluded to, we're all investing in Ethereum futures contracts. And so really the only ways you can differentiate yourself are obviously cost, which we're coming in significantly lower than most of the others at 66 basis points. And then further to that is how you structure the ETF. So we structured ours as a C Corp, and we feel that's a superior tax advantage vehicle for taxable long-term investors. And really that comes down to the long-term benefit of being able to carry forward and carry back your losses. And in a volatile asset class like crypto, obviously that can be instrumental for investors.
Yeah, if you can explain a little bit more about the C Corp versus some of the other structures that are out there in the market today, and how that might benefit certain taxpayers.
That's right. So essentially, ETFs, most ETFs that we all know and love are structured as RICs. And so the C Corp, the difference between the C Corp is there's one negative, and that's corporate taxes accrue at the fund level daily. And so you may see a NAV underperform in bull periods. However, counter to that, you are afforded the ability to carry forward losses. And so in down years, in a RIC, all those losses are actually just lost. And so in a C Corp, you can carry those forward and offset your future gains. In addition to that, all distributions from a RIC are taxed at your ordinary income rates, which can be as high as 37%. And so with investors in the C Corp, you're actually taxed at QDI rates, which is about 20%.
But you're taxed twice, right? You're taxed on the C Corp level, and then you're taxed on personal income level. That doesn't, as you mentioned, that the carry forward would basically accrue to the C Corp, not to the individual.
Correct, but it accrues to the NAV. So that is in your performance of the fund. And so when taxes are offset in the future, or even 3 years back to call out back taxes, and the investor realizes that through the NAV.
But that's assuming they're going to hold for extended periods of time, correct?
That's correct. And that's why this structure is really ideal for longer term taxable investors.
Let's talk about one of the other differentiators that Cynthia brought up in the last segment. VanEck also announced that it's going to donate 10% of all profits from the futures ETF to Ethereum core developers for 10 years. Talk about what went into making this decision and how it's going to work.
Yeah, I think VanEck sits at a really unique intersection of traditional TradFi, if you will, firm founded in 1955 to kind of a crypto native future-looking firm. And one of the benefits of having this talent is people that are working and using this emergent technology daily. And so we are aware of the work and the time that these developers spend to maintain this blockchain that we all are using. And so it makes sense that we all stand to gain, both TradFi and crypto native, that we should be supporting that community. And so it really was a no-brainer.
So just to be sure, though, is this going to be like the Hollywood bottom line where there's never a profit? How is this going to work in terms of, as you mentioned, it's a C Corp, and that if there are losses, those losses they can basically carry forward to the future or claw back in the past. So how would it work here in this situation? Is it annually? Is it based on how are you calculating such profits? And as a shareholder, why don't I just get the profits? Why not let me deal with it and allocate it to developers the way I want to? Why do I have to have you guys do it?
Sure. Now, to be clear, this is VanEck sharing our profits from the fund with the community. This is not impacting the shareholders of the fund directly. And so we will work with the details with Protocol Guild to figure out the timing. But to be clear, we intend to be fully transparent with this donation. And so to the extent we can be transparent and show transactions online, we will do so. Of course, these details need to be finalized with the Protocol Guild and VanEck.
So that's the profit you're making on the transactions. But let me ask about kind of what happens today. And this is a question asked previously to our previous guest. What happens if these, you and the other 8 or so that have been approved for today, what if it's lackluster? What does that mean? God forbid, I know, everything's going to be perfect and great, okay, fingers crossed, the whole works. But the reality is the world is a different place than it was a couple of years ago. What happens if this is a lackluster release? What does it mean for spot ETFs? What does it mean for the overall crypto ecosystem if this underperforms investments today?
Sure. I think, for one, you're right, as you alluded to. It's a different market today than even when Bitcoin futures ETFs were launched. Certainly things were going much better in the crypto space. But I think regardless of the amount of asset managers launching these products, this is a monumental step forward for crypto. And the reality is, since 2017, we were one of the first established ETF issuers to file for a Bitcoin-linked ETF. We have always followed that ethos of, if you want crypto exposure, you should buy it directly and self-custody it. If you can't, then the next best way is to buy that through an ETF. And so we think there are a lot of investors out there today that either can't or won't buy spot crypto. And this product is really for those.
Kyle, thank you very much for joining the show this morning, and congratulations on the launch.
Good luck.
Thank you all for having me.
That was VanEck, head of digital assets product, Kyle DeCruz.